Good morning, everyone. It's Chris Blandin De Chalain with the 4 Majors Month update for the 11th of October 2013. End of week, Friday. Looking at the 4 majors using the FX8 Ultimate template. Let's start with the euro against US dollar on the daily. What has been happening this week? Well, effectively still in a consolidation pattern after price failed to actually break the current highs. And what we have seen is price making a lower swing. However, pulling back to the price support and resistance level here, the consolidation level that we've seen through the latter part of September. Yesterday in particular, an indecision candle after a bearish engulfing candle the day before. However, after the bearish engulfing candle, prices fell to actually break or trade any lower, and what we had yesterday was an indecisive candle. And if you look at the actual indicator box over here, primarily the long-term sentiment is still very much positive. There is a lot more positiveness than negativity. I feel if we still stay above the 50% retracement level here on our monthly, we should still be looking for potential buying sentiment. Indecision candle, we don't trade indecision, so we've got to wait for decision. The longer it stays above this level area here, the more likely is price is going to revert to the upside. We do have an intermediate low, so on our 4-hour time frame. So let me just take you there so you can see that. So you can see the all-time highs we had recently, and you can see the tweezer top, the bearish engulfing candle. So you can see the swing low here in play. However, you can quite clearly see the consolidation area that we had through here through the latter part of September, which is now where price has just bounced. So as long as it maintains above this level, above the institution, we're still looking for positive momentum to the upside. At the moment now, however, on the daily, you can quite clearly see that we have an indecision, and what happened is price is now consolidative. So if we look at where price is now, you can see there's been a consolidative range, then we had the breakout and continue higher, then the pullback, and then the failed continuation. Price is broken and is trending back within this range. So hence the reason why we have an indecision candle on the daily. Far better to get a breakout to the upside or a break of this major support and resistance level here at the 50% retracement on our monthly, then target the institution moving to the downside. And that's a good healthy 76 pips away. So trading within consolidated range, no trade at the moment because of that consolidated range. Rather wait for a break high or low of this area on the 4-hour to give you a genuine opportunity to trade. Moving on to sterling, here on the daily, exactly the same thing that's happened on the euro. We almost have a potential high here in the fact that price has actually failed to break above the weekly. We have had an attempt at the weekly fib here, quite clearly at 23.6. However, we had the pullback and then the continuation candle is what we were waiting for. That continuation candle failed to find support here and to kick onwards. In fact, it actually broke lower and it now engulfed the prior 2 days and subsequently at a resistance level, and that actually saw price rally to the downside back to the price support and resistance level area here at 1600. Now psychological run number. However, 2 days ago we saw price actually bearish engulfing, closing below the 1600, and you can see the consolidative range below this level. Price has been swinging high up until recently, and price is trading at that level as we speak. We are trading below the 1600, which is a psychological round number. That's going to be a negative sentiment. You can see that the indicator box is primarily blue. However, there's a lot of red and it's all over the place. The overall sentiment on here is upside because all our longer term moving averages are 50 and institution are still below price. The 20 has been breached just recently, and you'll notice the 20 pair moving average up until recently has been acting as a fantastic support level for this pair. We have had an intermediate swing low on our 4-hour time frame from the highs. There we go. You can quite clearly see swing lows. We had a bearish engulfing candle here on the last pullback, and subsequently price is now trading below this consolidation area that we saw recently. As long as it maintains resistance now under what was price support, then we should see price kicking on lower towards ideally the institution moving average on our 4-hour time frame, which is primarily roughly just short of 100 pips, just over 100 pips. Take away the spread to that level. Once we get below that, then we should be looking to target our weekly fib level below price, because price is going to move towards these levels. So from the institution moving average to that level is another 213. So there's more than enough here. There's at least 340 odd pips to that level to the downside, as long as price is making swing lows. Very, very important. This 1600 is a major support and resistance level in terms of the psychological side of it. So make it nice and thick and say to yourself, great, it was prior support, now it's broken it. Now what we're looking for is the pullback, which is in play right now. What we want to see now is to be genuine negativity is the continuation to occur in the direction of the breakout, which in this case was lower. US dollar Swiss franc consolidation recently has seen price moving between these 2 points. A lot of consolidation here through the latter part of September. Then we had the breakout, the pullback, and a slight movement to the downside, failing to tackle those weekly and monthly fib lows over here. Quite a strong support level been found, a bullish engulfing candle trading back into that price support and resistance level here at the 90.81.4 change, pullback, and then another bullish engulfing candle moving higher. Now what we need to do is use this price support and resistance level as our intraday support in this case, because the last daily that we had on Wednesday took us above this area. Okay, you have an indecision candle yesterday, so now we want to see a decisive candle. Bullish engulfing, the intermediate, you can quite clearly see, has been pushing higher. You can see swing highs in the intermediate time frames, which is good. So we just need a nice continuation candle. So a nice 4-hour bullish engulfing candle here would indicate price is still looking upside. And from the support of here to the institution to start with, there's a healthy 110 pips. Take away the spread, more than enough. You can see the overall sentiment on the indicator box over here. Long term is still very much negative. Intraday, we are seeing a bit of negativity, and the R squared is complementing that. So we know it's genuine selling. We haven't seen price trading over the current Asian high. You can see a lot of consolidation over the past couple of days in particular. So ideally, we want to see a 4-hour close above this area, because then we'll be getting away from this consolidative range. And once we do that, then we can start looking towards that weekly high here at the 23.6, way above the 92.75 and change is our ultimate target. But between there, from here and there, is the institution which we can take a quick short-term profit from. Last pair of the day, US dollar Japanese yen. Been in the squeeze pattern. You can see I've been using the parabolic SAR indicator on here just to give me an idea of what's happening. You can see a lot of volatility on this particular pair. Price has been moving between the 2 points very, very aggressively. Being squeezed, the most important thing to see here on this particular chart is the fact that the institution moving average, let me just get rid of this. You can see the institution moving average acting as clearly a support, has been price has been trading above the institution moving average on the daily since 20 of October 2012. The fact that now we're trading below it at one stage, and now we've had a pullback, as long as it maintained below the institution moving average, then we're looking for the continuation. So the breakout, the pullback, and then the continuation. Yesterday's bullish engulfing candle for the US market against the yen has seen price moving back above the institution again. So if this is to be long-term positive, because you can see quite clearly just near term we had a lot of swing lows, swing low, swing low, swing low, swing low, and then into the weekly 23.6 at 97.10. Then we had the breakout, the pullback, and now this candle over here, which should have been the continuation candle, failed to stay lower than 23.6, moving higher. So there was a bullish indicator moving back towards the institution, would have been the first target intraday. That's been clearly breached now. As long as this area over here, now the institution on intraday, and you can see I've drawn a horizontal line here just to show me where that institution moving average is on my shorter term time frames. As long as that maintains the support, what we should see then is for price to kick on and then attempt the prior highs that we've just come from, the swing high, the swing low, these areas over here. There, for example, BB1, and then as we head into that 50% retracement on the monthly would be our ultimate target. So where price is trading right now to the next swing is a good healthy 58 pips, but ultimately back up towards a trend line or to the monthly fib here at 138 pips away is ultimately our target, as long as price maintains above this 98.06, which is our institution moving average on our daily. So if I go to my 4-hour now, just swing it over, you can see the institution moving average is in play right now as we speak. So we had a breakout, the pullback, and the continuation candle over the past 20 hours. The RMO has gone positive for the first time since early September. Okay, and you can see through here a lot of buying sentiment, and the MACD indicator pretty much telling us of that. And you can see the parabolic SAR here really helping price as she moves higher. So get above the institution, and then we can head towards a 98.97. But ultimately, our long-term goal would be the 50% retracement here, which is at 99.67 and change, as price is now making swing highs on our intermediate trend. You can see quite clearly swing high, swing high, swing high, swing high. Okay, guys, so that's it for today. Short and sweet. Please, if you are using any of our templates, to please back it up with sound money management rules. Very, very important. If you are using this particular template or any of the Serene Education templates, to follow the rules of the templates, guys. Very, very important. And then just to back it up with sound money management. Make sure that you follow the rules in terms of support and resistance levels. Be well aware of your major support and resistance levels so you can target those levels intraday when you start looking for buying or selling opportunities. News out today, just have a look. It's quite quiet for the European market. However, this afternoon at 1:30 onwards, we have the CAD employment and unemployment figures. We have the US consumer sentiment figure coming out. We also have the FOMC member Powell speaking this afternoon at 4 p.m. GMT, as well as the fact that we have the G20 meetings day 2. So, and then we have a lot of government member boards for the Swiss franc and Canadian talking way later this evening. So G20 meetings all day today. I can guarantee you the particular talking point would be the US market in terms of their the shutdown as well as their ceiling debt debate. So be well aware of that, guys. Please factor it into your trading, and as always, keep it as simple as possible. I'll see you guys first thing on Monday morning. Until then, you guys trade serenely.